Hello traders, Nick Shaheen revisiting Hyliion because somebody asked. Somebody from the comments in another video said if I could update Hyliion. So this again is not me judging the company. It's me commenting on the actual stock and what I would do from a technical perspective regardless of what company this is. Just from a price action perspective. Why do I care about that? Because 90% of all trading in general is done by machines. Assuming this is not an AMC situation, because these guys, I think, have a better future than AMC from a business fundamental thing. One is building something exciting. The other one is trying to rebuild something from scratch that has been broken, theaters. So this is based on price action and what I would do if I was stuck long from a higher or if I just took longs, etc. Okay, so I think in my last video I didn't rewatch it. Usually I rewatch it before I doing the new one. So I'm going to guess what I said. Basically, that step one of making a bottom is to stop making lower lows, right? It shouldn't be a V bottom because those don't sustain themselves well often. So bounce and another bounce, so they stop making lower lows. They have done that before and failed later. And that's where the concerning part is, meaning it's not a cement floor. It is for now, but you have to be open to the idea that crap can happen and it could fall through no fault of its own. The S&P is at all-time highs, really high all-time highs, and if the S&P trips 10-15%, it could happen any day. It will take everything with it, this one and other ones. But let's look up. All right, so step one achieved. Step two, making progress against the descending trend line of lower highs. That is also important. It's okay to make lower highs on a long-term basis. This is a daily candle. So if you see lower highs, lower highs, lower highs, that's okay, as long as they're coming up to meet. So now the battle is going from this range going into a point, and they're going to meet here somewhere. And now they also have to look left. They have to deal with prior pivot zones. Those are areas that meant something in the past. So right here, that was March 5th, where the market was falling out of bed. So this one was wrapped up in the markets. That's the visualization of why was it falling so hard. On that day, the NASDAQ was collapsing, like that. It felt like it. So somebody long calls in the NASDAQ just got shellacked that couple of days. And it bottomed, I think, in March 5th and 8th. So you see it follows the market. So that trip here was through no fault of its own. But look how badly timed it was. When they were making their hard stance, then the market trips, takes all the efforts of weeks of work to stabilize, gone. So now they came back to it and failed. See that? And then went lower and lower. So now they're going back into a prior point of failure. Why? Because, okay, they bounced hard, but then they couldn't retake it right here, give or take. And now they're back to it. So it doesn't mean they're going to fail again. It just means that they're going to have to work hard. And in fact, let me get you something exciting here. Technically speaking. Now, if you believe in the company and I know a lot of you love it. I think you should love it, but not trade it with love. How about that? Because you're probably going to get blindsided by love. So ask somebody else's opinion. How about that? As a secondary thing. So this is a neckline of sorts, here, wherever you want to draw it. So they're coming into it. It's okay to fail, and it's okay to drop this. I wouldn't want them to lose 10. Logical round number, it's like, but also would make sense. Staying up here would be great, but I don't know if they can do that. But if they do it here, that's fine. Come back to it and battle and take it out. What do you have now? Some sort of an inverse head and shoulders. You get one shoulder, one head, and a shoulder. So the upside potential is this much from the breakout. So eyeballing it will bring it back to 1615, which was a big problem, right? Through no fault of their own. Timing was terrible during that time. The market was falling out of bed. That's the proper way to get back up there. Now, what do I do? If I got long here, I'll take it off from a trading perspective. If I wanted to stay long the stock, I would sell covered calls against it. If you don't know what that is, do homework. It's a lovely way of doing it. I'm long Rocket out to December. I've been selling covered calls every week. I just renewed one for next week. The ones for this week one, at 22, I renewed them for 25 or 26 for next week. And I'm long at 20.9. So that's the best way of putting, worst case scenario is me having greens, just less than otherwise, okay? So just do the homework on that one. They're worth it. If not, reach out. In the description, I have a link. We do this all day, every day in the chat room. Pretty lively. It's 300 people in there and counting. So if I got long here, I would book some. Let's say I took 10 contracts or 100 or 1,000 shares, I would take some off the table just to make sure they don't take them back from me in case we revert lower through its fault or no fault of its own. Okay, so that's one thing. So if this bounce brings me back to even, I would get out and change my longs one way or another, or at least revisit the reason why I took the long and say, maybe I want to get smaller. So I had a problem, it was huge, now I'm back to whole or close to it. Let me make my problem smaller in case we revert lower. So I'm staying long, but less long. That would also make sense to me. So what's so important about this level? I don't remember the exact value. You probably know it more than me. Wasn't that the price today? Wasn't that almost exactly or close to the warrant prices? So not that that is like magical number, but it's probably not a coincidence, and it's probably going to play into the machine's minds or the trading mentality. I don't remember how many millions of shares warrants were, I don't know how many were redeemed. So those holders might have a decision to make around this value. So that's why they come back into play. So these are my pictures from before. This line was important. And look, if I extend it to here, I said, if you lose it, we're going lower. Luckily, they didn't draw the whole bottom, but they got pretty darn close. But now they just got back over it. This battle was great. So if I extend it right, so now I can visually see how it meant something. I didn't move it up or down. I just moved it right? So I'll take that and delete it. I don't need it anymore because it's right there. And this one is now supportive. So they can drop into it. It should be some sort of support zone because it played a role. They got above it with conviction. Now if they should come back. It's okay to come back and test it to build the breakout from this area. So if I wanted to add a line, it'll be a happy line, but I don't know where I want to put it, at the top of this one or at the top of that one. I'm going to put it at the top of this one because that's the most recent trigger failure. So what I'll do is I'll put it here, and then it's a breakout opportunity if they can take it out. So I'm going to make it smaller font. So they might have enough if they take it out to just blow by this one and this one. They're going to have to burst through, otherwise they're going to have a lot of choppiness up here. So that's the inverse head and shoulder neckline ish. So that's the trade on this guy. See, warrant strike, but I don't know exactly what it was. For some reason 1155 or 1125, I don't know the number exactly, something 11 dot something. This one trigger lower, yeah, no kidding. Right, so let's zoom out a little bit to see the whole trade. Just to recap, 18 was really the magic number not to lose. They lost it, then it repeated the process at 15. So now they have a legitimate path back to that level, if just as we just discussed it. So if you zoom back in, now the picture looks a little neater, a little happier, higher lows, attacking a prior failure zone. And then once they do that, they can repeat the process going up. But just in case they don't, listen to my words about getting smaller. So the best trader I know is she's been trading since forever and super successful, has written books and all of that. The one thing she says is get smaller when you're in trouble. Meaning if you had a trade and it was in trouble or still is in trouble, you still want to be involved, why not take some off the table just in case there is a worse picture? I understand loving something to death, but my conviction is never 100%. Just from the perspective of, let me take these lines out and show you something here for sanity. You saw what happened in March, right? I showed you that big dip in March. I want to show you where is the risk from. What chart is this? This is, quote, the market. This is not an obvious point of entry for anything. So if the S&P just corrects 10%, where do you think stocks like Hyliion would be? Believe me, machines will go into conservation mode, and reverting to the mean is 20%. on a monthly basis. On a weekly basis, it's 10%. And 20% will still get us into the bottom of the trading range, which will still be bullish. But the pain for longs in other stuff would be tremendous through no fault of their own. So the first step in investing, when I share a trade, and I do every day in writing with videos, is macro. Before I speak anything, macro. What does the S&P, what does the world look like? Then within that, the micro of that particular stock. And then within that, after that, the thesis. Why am I doing this trade today? If I don't have a reason and I can't put it in writing, I have no business trading it. Because how do I know when to get out? When that reason goes away, I need to be out, win or lose. That's what traders do, investors do. Otherwise, you're just winging it based on emotions, and that's not a good thing long term. Later, guys and gals.